is the first time that we've done this presentation. And yeah, I mean, Carmelo and I, we started this group. It's kind of like a secondary group to our Toronto first-time condo buyers group. This one's a little bit more advanced. It's called Level Up Your Mortgage and Real Estate Knowledge. And, the goal here is to basically just share our information. So, this presentation is about how to purchase your first investment property. And this is part one of a two-part series. So this one is really pretty much just like the theory. It's kind of like, what you need to expect, how you can prepare yourself for making that purchase. And then part two, which is going to be happening in 2 weeks, is actually going to dive a lot more into the meat and potatoes, where we're going to use some real life examples, our own experiences, things that we've done ourselves and things that we've helped our clients do, so that people can really understand how real estate ownership as a whole kind of opens up a lot of doors, a lot of windows, and how all that works. So just before we get started here, just a little legal disclaimer. We're not tax or investment experts. Everybody has their own goals, objectives when it comes to investing. What we're sharing is basically just our knowledge and our experience. So do your own due diligence, talk to an accountant, talk to a lawyer, make sure that you're doing, something that makes sense for you. And just do your own due diligence. And I hope you enjoy. I mean, this is going to be about a 20-minute presentation, and then we're going to open it up to some questions. And that's always the best part. So a bit about our presenters. Carmelo, go ahead.
So good evening, everyone. My name is Carmelo Boutis. I'm a mortgage agent at yourmortgageyourway.ca. I've been doing mortgages for over 20 years. Not that I like to date myself, but I started my career as a mortgage underwriter. For those who may or may not know, mortgage underwriter is a person at the bank that actually reviews your application and says, yes, you're approved. So the first thing I learned in my career is how the banks think and what you require to actually get an approval from a bank. Working over 20 years, I worked with the big banks. Also worked with a lot of, at one point, a smaller alternative lender, and now I'm independent. Being independent, what that means is I have no loyalty to any bank. I work for you. So if, for example, Big Red has the biggest rate this week, we're going to Big Red. And if it's Big Green, they have the best rate, we'll go to Big Green. And if it's an alternative lender or monoline lender, there's a lot of different lenders. Last year, Your Mortgage Your Way, we worked with 59 different lenders. So there's more lenders than just the big five. There's credit unions, trust companies, and monoline lenders. Well, monoline just means just banks and financing companies that only do mortgages. They're not going to try to solicit you for tax-free savings accounts or mutual funds or open up checking accounts. And a lot of times they offer good products as well.
So Big Red is who, CIBC?
I'm not going to, I can't really, this is recorded, Alex, so I can't really point out these vendors directly, but.
Oh gosh. Okay. Sorry. But yeah, make sure to follow Carmelo on Instagram at Carmelo Mortgage. A lot of great information. A lot of great posts talking about the bond yields, how that's related to mortgage rates. Very informative, wealth of knowledge over 22 years in the industry. So that's a bit about Carmelo.
Thanks.
A little bit about myself. I hear there's some beeping, so if anybody has any questions, I mean, it would be great if you maybe save it till the end, because we may cover it already in the presentation. I don't know if that was a question or a comment that was coming in. I just saw the beeping.
That's just me, Alex. The people are at the door and I'm just letting them in.
Oh, okay, amazing. So a little bit about myself. My name is Alex Schwaniecki. I'm a realtor with Remax Condos Plus in Toronto. I've been a real estate investor since 2013. I own properties in Ontario and in Alberta. Before getting into the real estate industry, I was the vice president of a service provider company that worked exclusively with Toronto condominiums. So I did that for a decade. I have over a decade of condominium experience working as an insider. I've conducted over 65 condominium assessments. I've probably been in every condo in downtown Toronto, whether that was to provide a quote, meet with a property manager, tour the property, advise on risk and mitigation, or we provided services there as part of the company that I worked with. Like I mentioned, I've been a real estate investor since 2013. I self-manage some of my properties, and then I have property management services for other properties. And I've been, like last year in 2022, I was in the top 1% of GTA realtors for condo sales out of 70,000 Toronto Regional Real Estate Board members that we have here. And if you want to connect on Instagram, it's at alexz.realtor. a lot of content about investing in Ontario and Alberta, a lot of content about condos and how condos are different, and just about getting into property ownership and my own experiences as an investor as well. So a little bit of an introduction about how real estate investment works and why real estate investment is such a great vehicle for wealth. So, real estate investment is basically purchasing a property with the intention of making a profit. So in many cases, your principal residence doesn't actually count as an investment property. And the reason for that is that when you sell your principal residence, you still have that cost of living that you're going to have to incur. So if you sell your condo and then you move to another condo, the cost of buying that new condo and the cost of selling your condo kind of equals it out. Now it's a little bit different if you're buying a duplex or you're living in a property where you can rent out the basement, or if you're scaling up or scaling down. But for most cases, a lot of investors do not see your principal residence as an investment. In most cases also, you gain appreciation and wealth through real estate ownership in three ways. So one is through the property cash flowing, meaning that the rent that comes in offsets your costs and you're making a profit every single month off that. The other way is through the tenant paying down your mortgage. And the third is through just the appreciation of that property, so the property going up in value. And over the last 23 years, the Greater Toronto Area had an average of between 5 and 10% of annual growth in real estate prices. But what you can see is that when we take a snapshot of the last 2 years, you can actually see that the average sold price stayed, pretty much even. Actually, it had a bit of ups and downs. And currently, I mean, these are stats for May. June looks a little bit different than this, but you can see that this time, this year compared to May of last year, condo prices are actually 3% lower, and same thing for semis. They're 1% lower. Detached properties are pretty much even, and then freehold townhouses went up 5%. But when you kind of look at this as less of a micro level and you kind of open it up on the macro level, you can really see what's been happening. So this is from TREB. This is the last 30 years of real estate prices in the Greater Toronto Area, and you can see that prices in real estate, they go up. And real estate ownership, it's a long-term game. It's not a buy and flip, unless you're buying a property that's significantly undervalued and you have access to renovators, or you own a renovation company yourself and you can renovate that property at cost. For the majority of people, you make money through real estate and you make that money consistently, but it's when you hold that property for a long time. That's what creates opportunities for you as a property owner.
Interesting stats, Alex. And again, that chart just kind of shows that if you want to own real estate, it's a long-term play. And same thing when it comes to investing in real estate. So, if you want, for those who want to buy investment properties, the first step is getting your financing in place. Investment properties, unlike owner-occupied properties, you do have to put 20% down payment. If your first property is an investment property, you're most likely going to be using your mutual fund stocks, selling investments to buy that property. If you currently own a home, what a lot of people do is they actually take the equity out of their home to put forward towards as a down payment, right? So the first step is kind of organizing your down payment, because at these prices in the real estate market in the Greater Toronto Area, it's not that easy to put. You're not putting 20, 30,000. You're dealing with hundreds of thousands of dollars for down payment, depending on the property buying location. So the first thing to do is find out where your money's coming from, and at the same time, calculating how much do you qualify to buy on a rental as well.
And Carmelo, like when you're looking at pulling equity out of your existing property, whether you're doing is there a preference whether you're doing a HELOC, so a home equity line of credit, or you're refinancing the property?
There's different options with different banks. A lot of it depends on where the person's initial mortgage is with. A lot of people go with the route of a line of credit. Nothing wrong with it. It's fine. I know with a lot of banks, line of credits are available with, at prime plus half. I actually do work with a bank that offers lines of credits at prime plus 0, which would be a little bit cheaper. And some people like to just add it as a second part to the mortgage or blend it in with their existing mortgage, Alex. So nice. There's a lot of different solutions, and you want to make sure you get that down payment organized, because we're dealing with large numbers. And at the same time is you want to know what you qualify for. And a little insight, when you're buying an investment property, the banks will, whether that property you're buying has a tenant inside or not, the banks will look at, rental income from that property will generate to help when it comes to qualifying.
Nice. So yeah, if the property doesn't have a tenant in it, they will basically just do like a market analysis to determine what the rent is, and if it has a tenant, then they're going to look at current leases and determine what's being paid.
Well, it varies because that current tenant may be leaving, right? The banks, what they'll typically do is ask an independent person, which is an appraiser, to do what's called fair market rent.
Nice.
And that appraiser just looks at comparables of what property sold for with its condo. It's very easy because looking at that building, what 1, 2, 3 bedroom condos have rented for. When it's a house or a duplex, it's a little different, but they'll still do the same analysis.
Right.
Now, when it comes to how much equity you can take out of your home, this is a question that I get a lot, and sometimes the calculation is a little confusing. So I'll kind of go over it slowly, maybe go through it twice. So how much equity you could take out of your home to buy another property really comes down to, you start from the top to the bottom. First, you have to understand what is the value of your property worth. So as an example, we're just saying 500,000. The banks could relieve, whether you're doing it as a new mortgage or adding a line of credit, combined, it cannot exceed more than 80% of the value. So in this case, it would be 400,000. Now, if you own a home for a few years, in this example, the mortgage is say 220,000. When you bought it, it was a lower price, it depreciated, you paid the mortgage down. Out of the 400,000, you got to subtract the mortgage you have remaining, which is 220,000. Therefore, the money you could take out up to 180,000 to buy an investment property or for anything you desire. But in this case, for this presentation, you should be buying investment properties.
So Carmelo, in this example of refinancing, how that would work, you're basically taking a home that has a $220,000 mortgage on it currently. However, that property has appreciated in value over whatever amount of years, and that the market value for it is actually 500,000. So basically 80% of that 500,000, which is 400,000 minus the remaining mortgage, is the equity you can pull out. Am I getting that correct?
Yes.
Perfect. Okay, so you basically have 180,000, which now you can use as your purchase. So you can kind of reverse engineer that and see, 180,000, what is that? What is the type of property that you can get with that if that's your 20%? So 180,000 would be what, like almost, I guess, $1 million?
20% of 900.
20% out of 900. So if, let's say, that's the example that we're going with, now you want to identify what kind of property you can purchase. So one of the rules in real estate investing is you want to buy the cheapest house on the best street. I mean, this is kind of what I always go with, because location is always appreciates, it's unbeatable. Now, there's different types of opportunities that exist in the Greater Toronto Area and the vicinity around it. And it really depends on what kind of market that you want to enter, and also what you're investing for. Like, are you investing for cash flow, or are you investing for appreciation? For example, if you're going to be buying a property in Toronto proper, let's say, you're going to be buying a $600,000 condo. Well, that condo is not going to cash flow, because simply put, the rent is not going to cover the maintenance fees, property tax, and the mortgage on that condo. What that condo, however, is going to do is it's going to appreciate, because you're basically buying a property in the top market in Canada. And Canada is right now basically one of the top, if not the top, real estate markets in the world, because of the amount of immigration that's coming into Canada. Like, we're expecting 1.5 million new immigrants are going to be coming into Canada over the next 2 years. And I think you said in a past presentation that something like 70% are going to be residing in the Golden Horseshoe. Is that correct, Carmelo?
Yeah. So I get this from one of the mortgage insurers. Not to mention their names, because again, we're going to share this on YouTube. I believe for the people who migrate to Canada, 80% come to Ontario, and then from that, another 80% come to the Golden Horseshoe. Right? So it's maybe not 70%, it sounds like 80, that's like 64%. Mm-hmm. So 64 out of 100 people that migrate to Canada come to and the Golden Horseshoe is kind of like, it's a weird triangle. It's like, it starts from like Niagara, and a little bit north of Barrie and a little bit east of, than Clarington, say. But it also includes like the Guelph, Kitchener, Waterloo area. So it's not like a perfect circle, but that's what they kind of consider the golden horseshoe.
Yeah, and when you're investing in a market that's basically you're only getting appreciation out of, like that example of buying a condo in Toronto, think about it like a forced savings account. So you have a tenant who's living in that property, they're paying down a substantial chunk of your carrying costs, and as time passes, rent is going to go up. We have an average of 10 to 15% of rent increase in the Greater Toronto area, which is not a great thing, but unfortunately, it's the reality of the market. Just last year, like last summer, 2022 was insane. Like we had a total misbalance of supply and demand. We had a lot of people that were moving back into the Greater Toronto area because the pandemic was ending. There weren't properties that were being freed up because there were people that got the rental property when the pandemic started and properties were cheaper. They're not moving out. Those properties are not hitting the market, and supply and demand just created, it was crazy. Like I had tenants that I worked with that had to pay 6 months up front. They had to pay a year up front. There were bidding wars for rentals. And I'm seeing it now too, like this summer as well. Like the people that I'm working with and I'm helping, both, landlords where we're leasing out their properties, we're getting multiple offers. Tenants are having to prepay rent. It's pretty substantial. So as time passes, that property that may not cash flow today will become closer and closer to cash flowing, and eventually will be breaking even and cash flowing. But think about it as a forced appreciation or a forced savings account that appreciates. Like, yeah, maybe you're putting, $800-900 out of pocket every single month, but you're gaining substantially more appreciation, and you're also having somebody paying down your mortgage. When you look at that over 5 or 10 years, that $800-900 is well worth the appreciation you get. And I'm not going to get into the numbers in this presentation. We're going to touch on this more in our part 2, where we break it down in 2 weeks. But you can see, and we do a seminar as well as part of our Your Toronto Condo Guys presentation, where it's renting versus ownership, and we show that something like after you've been renting for 5 years, you paid $155,000 in that example that we used to your landlord, while the homeowner gain substantially more. So we'll break it down in a future presentation. But there are cash flowing opportunities around the Greater Toronto area that exist as well. Places like Hamilton, or if you're going to Curtis or Barrie, but you're going to be looking at duplexes or single family homes that may come close to cash flowing, but not necessarily. But you want to kind of understand for yourself, like, are you investing for cash flow appreciation? Because there are opportunities that exist outside of Ontario. Like I mentioned, that I also invest in Alberta, and we have condo projects there that cash flow. So it really depends. And if you want to learn more about the opportunities in Alberta, at alexz.realtor, or book a call with me and we can talk about that more.
So the key thing is, when you're looking at investment properties, there's a lot of, you have to make sure, you have to look for what are you looking for? What works for you may not work for the other person. And I get a lot, well, what's the average person doing? The average person the average person isn't paying your mortgage and paying your rental, your property, right? What are your goals? What are your objectives and time frames? Time frames are very important. I do have investors that enjoy and like buying in Toronto, even though they know they're cash flow negative at the beginning, because I worked with them for a few years now they're cash flow positive. And vice versa. I do have investors that don't like that at the beginning, and there's nothing wrong with that. They want to know at the beginning they're kind of like close to break even. The rents, different markets give different opportunities, and each market has its own advantage and disadvantage. So it's not like one's better than the other. We're not trying to say that. It's just the fact that every property is different, and you gotta have your own investment objectives, right? So the second step, once you know your financing, is looking at the options and finding a property.
Yep.
So step 3 is you make an offer. Right? You make an offer, you buy a property, whether it's a home, townhouse, condo, and you secure the financing, right? You did your due diligence at the beginning, you got your stuff prepared. When you're making an offer on property, we're going to help you when it comes to like the analysis, when it comes to like what are the payments, rental income, to make an informed decision, right? So you're going to have the options, and you got to get to this point where making an offer and getting and winning a property. That's the third step of buying the investment property. It's probably the shortest step.
Yep. And the last step, step 4 is basically closing the purchase. So, you've closed your purchase, and now, here's where you actually make that investment a true investment. So you have to go out to market, you have to find a tenant. And we do have a webinar about finding tenants, but you could also just use a realtor to find a tenant, because as real estate agents, we have access to a higher quality of tenant pool, and we also go through a lot more steps of pre-screening tenants. So it really depends on whether you want to be doing this yourself or using a real estate agent. I know that in the Greater Toronto area, especially for landlords that own condos, most of those properties, they are using real estate agents, just because probably 90% of condo rentals are on the MLS, and even properties where people are renting out basements are on the MLS now as well. So that's just the environment. But then if you go to smaller markets, it really depends. Like if you live in Toronto, are you going to be driving to St. Catharines or Barrie to do showings? So see what kind of makes sense for you. Some people, they just simply enjoy the process. Like before I was a real estate agent, I was driving out to Barrie and doing showings on my property, just because I like the process and vetting people. But it's kind of like, what do you want to do? I mean, you maybe want to just hire a property management company to manage that property for you fully, but you would have to pay them a cut of your rent. Now, when you do find a tenant, it's important to understand that this is your client, you're running a business, and this is your customer. So building a strong, positive relationship with them and setting out the rules and guidelines of that tenancy are important ahead of time. Like nobody likes surprises. So put things in writing. If you need help as far as creating a schedule to go with your lease, feel free to reach out to me. I have some great examples that I use and I help my clients use. And it's, it's like, kind of identified, because I've had landlords where literally tenants called them and they said, hey, my light bulb's burned out, and they drove to the condo and changed the light bulb, as ridiculous as it sounds. And today's favor is tomorrow's duty. So now they're basically going to be changing the light bulb as long as that tenant lives there.
Are you kidding me, Alex? Like changing the light bulb?
Yeah, changing, believe it or not. So in my schedule, actually, I put that the tenant's responsible for any minor repairs up to $50, and I list there unclogging the sink, changing the light bulb. Like it's all listed in there. I know it's ridiculous, but this landlord, they didn't know better. They didn't set out the rules of engagement. The tenant called them, said the light bulb's burnt out. She drove out there, changed the light bulb, and that whole tenancy kind of became like, it's not a tenant. They're like living in a hotel.
Wow.
Yeah. So
that's the first I've heard. But again, I'm not surprised. Like again, you got to set the boundaries. I do with my tenants, my investment property, and another thing is, now that you got the property, you want to get things organized from the get-go. Separate email addresses for that rental property. You want to keep all your receipts that you have for the property. Banking, it's always good. It doesn't hurt to have separate banking accounts just for the investment properties. And getting documentation is always organized and prepared, so when you have to do your taxes the next year, it's going to be a lot easier for you and the accountant. Yeah. Right? Yeah. So there's a lot of things that happen when it comes to buying and at closing, right? And all these things, especially at closing, they build over time. And if you set certain parameters and do things the right way, it becomes very easy to own a rental property, right? The process is...
Yeah, and there's a lot of write-offs that come with this as well, like driving to the property, your mileage, all of these things too, right?
Yeah, like when you own property, there's a lot of benefits, right? The one key benefit is when you own the property, let's just say for 20, 25, 30 years, whatever your amortization you're starting with, you're gonna have a tenant pay that mortgage down to zero, and after that time period, you're gonna own a property that's free and clear, which you could either sell and have a lot of capital, or you could continue renting and have income for retirement, right?
Exactly. And your positive cash flow will just increase over time as well. And once you gain some equity, through that property, you can always refinance, and you can take out that equity and then use that again as a down payment, and then kind of continue to repeat that cycle.
Well, that's gonna be one of our future presentations. Yeah, you could. A lot of people over time, as you pay that the rental property, tenant pay that rental property down, the mortgage down. You have a lot of opportunities. And the key thing is owning real estate and rental properties long term is, again, it helps create equity, long term wealth. It's real estate transferring to future generations. Relying on a government pension, CPP, OAS, I'm not going to base my retirement on what the government's going to provide to me. I want to control my retirement.
100%. And, real estate ownership is going to be more and more scarce as our population continues to grow, because there's taxes that the government puts on new home builders. It's challenging for them to get permits. Properties are simply not being built at the same pace as the demand for those properties across, pretty much, most markets in Canada. So, owning real estate is probably the best and safest way to make sure that, you're looked after, the future generations are looked after, because, I think that, Canada's heading to a state where home ownership is not, now it's not guaranteed. A lot of people cannot afford to own a home, and these are people that are making substantial money. So it's going to become more and more of a rarity. And those people that are able to, get into properties and own them and hold them long term, they're going to be securing themselves and their families and continuing to build that generational wealth. Because really, food, water, and shelter, those are just three basic needs that we have as humans. Not going anywhere.
Yeah, and rental properties have benefits that owner or occupied properties don't have. A lot of it comes to like tax benefits. When it comes to, we're in an environment with higher interest rates, but the interest rates on a mortgage, again, all disclosure at the beginning, that legal, talk to an accountant. The interest you pay on that mortgage is be used to help offset the rental income you receive, so you pay less taxes on that. Right. Like Alex, you mentioned like driving to a property, like getting the bills, the receipts for the maintenance of the property. It comes with some tax advantages, and taxes are like when you sell the property, you pay what's called a capital gain, which is less than the money you make whether you buy a widget and sell a widget, which is all going to be taxed on that profit. So there's a lot of benefits. We're trying to keep it simple with regards to the long-term benefits.
Yeah, this can even help to offset, and again, like, you talk to an accountant, but like it can also offset some of your personal income tax that you're paying as well.
Yeah, if the first year you're showing a loss, or second year because it's just interest rates are higher, more, the mortgage payments, the part of the mortgage you're paying as interest is higher than the rental income you're receiving. If it's like that for the first year or two, well, in the high income tax bracket, they actually give you the tax refund. So there's a lot of benefits. I guess I don't want to go into accounting too much. I'm very familiar with it, but legally, again, it's talk to an accountant or expert, right? So for those who were joined, obviously you have some interest, right? This is a time to ask questions and hear your thoughts. What questions you have when it comes to buying investment property? Who here is actually interested in or owns investment properties, want to share their stories? You could either unmute yourself, raise your hand would be great, or ask questions in the comment box.
Okay, so I will, so Jane raised hand. So Jane, do you have a question for us?
Hi there. Yeah, and thank you very much for all of your information. I am interested in cash flow opportunities, and I'm curious if you're seeing much in the kind of Kitchener-Waterloo or Waterdown to St. Catharines area. Along the GO line is specifically where they're building the GO line is what I'm interested in, and how you go about finding those properties, like physically going there, over dealing with realtors, or any suggestions.
So I can talk about this, Carmelo, if that's okay. So Jane, there are opportunities in those areas for cash flow properties, but essentially you're looking for a duplex. So you're looking for a property where you can rent out the basement and the main floor. One of the good things in Ontario is that pretty much everything is listed on the MLS through TREB. So like the Toronto Regional Real Estate Board, has access to properties throughout. Pretty much the majority of things that I see are listed on the MLS. There are sometimes rare opportunities that are off market as well. Like there's some off market channels, but sometimes those are properties that need heavier investing as far as renovating the property and bringing it up to shape. So if you're looking for something that doesn't really need much work, the MLS is the way to go. So, working with a realtor to, find a property, go out there, book showings, look at properties, make sure that you're protected as well with proper conditions like home inspections and financing. That's the best way to go about it. And like Carmelo and I were kind of talking I don't know how early you joined the presentation, but before we started to share our screen, we were talking that there are some really good opportunities that are going to be existing this summer. And a big part of that is because the interest rates have actually increased, but that's also, driven property prices down. And a lot of properties that we see that are being sold now are being sold by investors, and those are investor-friendly properties. It's just because they either are selling that property, maybe they're buying a bigger principal residence for themselves, or they simply have too many properties that they accumulated, and they're kind of starting to liquidate their portfolio. So happy to discuss that in more detail offline if you're interested. I think we do have a Calendly link here if you want to book a call with us about kind of what we see out there. I hope that answers your question at least partially, Jane.
Yeah, that's great. Thank you so much.
Amazing. I see SA has a question. So my question is about tenants. There are a lot of issues around landlord and tenants, whether the board of or the legislation. You mentioned the light bulb, which I agree is silly, but the landlord is responsible for maintaining the property, correct? What are the drawbacks to taking in tenants? So, one of the things SA is, like I mentioned, it's about kind of, setting out the rules of engagement and also putting it in writing. So, including a schedule where you're identifying, things like, making sure that things like smoking rules are identified in your lease, making sure that minor repairs are identified in your schedule. It's also about if that, like my client landlord that drove and changed this light bulb told me about this after, and then my response is, why did you do that? That's not going to be the first or the last time that you're doing that. And it wasn't until the tenants left. So, it's also just about kind of like today's favor is tomorrow's duty. So, you want to be accommodating. You do have some responsibilities as a landlord. Of course, you have to make sure that property is safe. If you have a property where, maybe it's a duplex and you have people in the basement and people living upstairs, there's things like the Smoke-Free Ontario Act that you need to make sure people are not smoking where, secondhand smoke is affecting other people. If there are breakdowns that happen in the property, like the dishwasher is broken or there's a plumbing issue, you have to go and rectify that. But it's also about, finding out what caused it as well, and making sure that also your tenants are carrying the right type of insurance policy. But, when I have an issue that goes in my property, I send my plumber out to rectify it. But then I asked them, like what happened? What is your diagnosis? How did this occur? Was this just wear and tear where something gave out? Or was this a situation where something wasn't used properly or was negligent by the tenant? And then holding those tenants responsible. And if there's a flood, tell them to, take it through their insurance or cover that cost. It really, it's about kind of being fair and just, but also at the same time, making sure that everything is kind of spelled out.
So Alex,
yes.
Yeah, when you filter tenants, do you find times like I can tell you myself, with my properties, on paper people may look good, but I also have sometimes my gut. You meet them, you talk to them. Sorry?
I would always go with my gut.
Yeah.
I don't even did you hear the rest of that? If your spidey sense is going off.
Yeah. So, to help answer that question, you have to build a good relationship at the beginning. And going through the process and vetting the tenants, right? That's why, like yourself, using a realtor, whether, if you want to do it on your own, Facebook, Kijiji, those websites, they're great. You can definitely find good people there, but on paper, they may look good. Also make sure you go through your gut check, right? To help at least filter some of these small little things. So we have a new question.
Yeah, and at the end of the day, sorry, just to add a little bit more to that, is this is a person that you're going into a relationship with. So it should be win-win, and you should feel comfortable interacting with them. If this is somebody where you're having a conversation with them and, they're difficult to communicate with, you're under no obligation to rent to them, and you're going to be having to deal with this person or these people for the duration of their living in your property. So, make sure that you're also comfortable. And when I'm representing a landlord and we're finding a tenant, one of the things that I always encourage my landlord to do is, first of all, to be there during the key exchange, to meet them, but even meet them ahead of time, like set something out that, the offer of this lease is subject to, whether it's an in-person meeting or a Zoom meeting, and just ask them questions and making sure that everything makes sense. Now, Sue wants to know about adding a schedule to the Ontario lease. So there is a section in the Ontario standard lease that asks if there's any other schedules or attachments as part of the lease, and you can check off yes, and you can write in Schedule A. So there is a section for that in the lease. Smoke-Free Ontario Act around vaping, yes, it does include vaping. And is there a fee for using a real estate agent to identify a potential tenant? So the standard fee, Sue, that basically all real estate brokerages charge is 1 month rent plus HST. That 1 month rent is split between the landlord agent and the tenant agent. So if Carmelo, or Carmelo's not a realtor, but if I'm, let's say Carmelo is the tenant agent and I'm the landlord agent, and the rent is $2,000. Well, Carmelo brings the tenant, they get approved. His brokerage gets $1,000. My brokerage gets $1,000, and the rest of the first and last month's rent goes to the landlord. I mean, it's actually, when you're taking first and last month's rent up front, which is the standard, and you're only really using the last month's rent to pay the brokerage, and then you have a new tenant that you need to maybe find in 2 years, and that same process goes again, you can kind of continue to roll that as well. But yeah, that's the standard fee.
Good question. Good question, Sue. Thanks for asking. Yeah. So again, when it comes to the cost, Alex, again, I know there's a lot of value, because I tried using Facebook Marketplace and Kijiji ones, and it was not fun. It's just, I'll leave it at that.
Yeah, I mean, I've some of the things that we identify, and it's just through also our own experience, because since we don't have any more questions, I'll give like a little experience here. Oh, is there a lot of work in vetting? It is a lot of work in vetting, and a lot of, is this available? Is this available? Are utilities included, even though it's stated in the listing? But one thing that I found, this was like about a month and a half ago. So we had some people that applied to rent out a property on Dundas and Jarvis. It was a condo. I kind of looked at their documents to, start the pre-screening process. Everything kind of looked fine. But then when I looked at one of their employers, I never heard of this company before. So I started to search the company, and I found that the company had, a LinkedIn profile and a website that looked kind of generic. But I went on the LinkedIn profile, and they only had one employee, and that employee was the one that wrote the employment letter. And when I looked at the picture of the employer, or the person who wrote that employment letter, and right-clicked it and did a Google reverse image search on it, it came back as an AI-generated picture of a man. So this person, created a fabricated company with a fabricated website and a fabricated human resources person on LinkedIn that created a fabricated letter that they submitted to then, lease this property, and also say that they're making something like $160,000 or $180,000 a year. So, 1 month rent, but if you're kind of, may seem like a cost, but if you're going to be, prevented from having somebody like that, I don't know what their intention was, whether that was just to get the property. Maybe they're great tenants, but what if they get in there and they stop paying rent and they get in fraudulently? Somebody submitting fraudulent documents. We're seeing that happening. It's just because of our market.
You have to look at it, Sue, and everyone here. You have to look at it. Really depends on the property you're buying, the location as well. If you're buying further away, do you want to drive out all the time or hire someone locally? Again, there's an advantage and disadvantage with every option. Yes, we could do it on your own. I tried it once on my own. Yeah, I saved the 1 month rent at one time, but will I want to do it again? No, I don't want to do it again. Because again, it's just a lot of extra work for it, right? For such a small cost.
Yeah, driving out to Barrie, the person doesn't show up, and then
if you have a property where you're buying a property, and let's say the investment property is going to be owner occupied and rental, where you buy a duplex, you're living upstairs and you're renting downstairs. Well, maybe if you want to do it on your own, it'll be a little different, right? You got to look at every opportunity and every investment differently.
Yeah,
if that makes any sense.
Has to make sense for you. Some people just like the process. Some people, it's also, you have to feel comfortable too, right? So there's always solutions. I have a small building, 6 units, that's in Kitchener-Waterloo. Do you vet for this area? 100%. 100% we do for Kitchener-Waterloo. So, these units, when you're renting them out, they can be put on the MLS, and then other realtors bring their clients and show the property, and then other realtors would submit the offer with the supporting documents for their clients to lease out the vacant property. And then, your leasing agent would then present these offers to you, and then you basically select which ones you're interested in. Then the property gets, then the agent goes and vets them. They provide the findings to you, and then if you're comfortable moving forward, then it kind of continues to go forward from there.
Stu,
One thing,
yeah. Sorry, Al. Stu, what I'd like to invite you to, if you want to book a 15-minute meeting with Alex for something that's specifically for yourself. Alex, to continue on with the explanation, but feel free to share that, and he'll help you. He can help you. But the answer is yes, you can, Alex, in that area. And I apologize for interrupting. Continue with what you're saying.
No. One thing, what I was getting at is that and it's kind of like going a little bit off topic, but one thing that I wanted to throw out here, because we are talking about tenants now, is that, I sometimes come across tenants where, they put forward their offer to lease a property, but because there are some shortcomings in that offer, they offer, maybe 6 months rent up front, or even a year up rent up front. I strongly warn landlords against taking that bait for somebody who you otherwise would not be interested in renting to, because ultimately at the end of the day, you take that and then after that tenant continues to live there. So it's a lot better to just find good tenants, and just like everything has to make sense. It's not just about like how much money they make or having the best credit score, but also just being somebody that you're comfortable interacting with and building that relationship with. And keep in mind that this is your client; they are paying your mortgage, so it's not such a blood sport here finding tenants, even though sometimes in Toronto it seems like it is. But yeah, it's there's a big humane factor here. When you own properties, and so you have a 6-unit property in Kitchener-Waterloo, it's like you're providing homes for 6 families.
Yeah, no, it's true. Now again, I do have a question for everyone that's joined us tonight. You don't have to answer put your mic on, but maybe you could answer in the chat group. Are the people that are joining us tonight, do you currently own investment properties? And if you do own an investment property, maybe put O or yes, in the chat group. And I want to compare to those who are interested in buying your first investment property. If you're interested in buying, put like I or interested in the message group. Just kind of curious with those who joined.
Yeah, we just want to see how the dynamic is kind of different here, right? Like what kind of we're going to send out a survey as well through our account later, either over the long weekend, or it's not really a long weekend, or maybe early next week, because we want to also find out, like, the community grew very rapidly here. Like, we have over 200 members in this community. We started it a month and a half ago, and it was basically just part of our Your Toronto Condo Guys, first-time condo buyers group, where we wanted to also assist and provide knowledge for those who are looking to do more advanced things than buying their first condo. But we're going to be sending out a survey just because we want to also get feedback from the people that are joining these webinars to see what is it that they're interested in us having webinars about, so that we can ultimately assist you with that as well.
Thanks for everyone's feedback in the chat group. I see a lot of you are interested. Thanks for your response. This is the first part. We're going to do another one 2 weeks from now, and we're going to actually be going a lot more when it comes to the specific numbers to show when it comes to buying an investment property, how to do it, and the results. Alex can share your story. I'm sure my story, and they're both different examples. But it's going to be you're going to see some actual numbers this time with regards to buying and how it works. Because I could tell you, when I bought my first property a few years ago, I couldn't do it on my own. I'm not going to lie. But again, it's still got into it, and it's the best decision I've ever made.
Yeah, there's lots of ways to do it. Joint ventures is part of it as well, and it's just about taking those steps, because ultimately, like, you want to make the decisions today that that's kind of my approach. Is like, make the decisions today that your future self is going to thank you for, 5-10 years from now. And it's not, there's never going to be a perfect opportunity to do it. Like, so, sitting and analyzing, ultimately, as we showed in our presentation, home values continue to appreciate. So it's about getting into the market. And then once you've built up equity, you have, opportunities. Like, we'll share our experience, but I basically have created my real estate portfolio just starting from like one property and using equity. So, you can, it's very real and very achievable even in today's market. And there's opportunities outside of the, I don't know if I want the headache. Sorry, I'm just reading David Gordon's comment in the chat about joint ventures. But yeah, I mean, there's opportunities that exist in Ontario. There's opportunities in markets like Calgary as well. And, I'm doing also a lot of pre-construction work out there as well, selling condos and freehold properties in Alberta that cash flow and have very attractive deposit structures. So, if you want to connect on Instagram at alexz.realtor. I do also have another webinar that I host where I talk about my experience investing in Alberta. But yeah, if you want to see what's available out there, it's pretty great. Benjamin wants to know, what legal aspects should we consider in finding our first investment properties?
So maybe I don't understand that I remember the word legal aspect, right? Because again,
Benjamin, can you elaborate on that a little bit? We also want to make sure that we are the right people to give an answer to this question, because neither of us are real estate lawyers. So, I mean, so I'm not. If you care to elaborate, that would be great. Or if you want to book a call, we can chat offline as well about that question. Do we need to include a lawyer to initiate it? So you do need a lawyer to close on a purchase. So no matter what, to register your mortgage, to transfer title, you need a lawyer for that.
If you're anytime you're dealing with any real estate transaction, whether you're buying, selling, or even when it comes to mortgages, I get this a lot. Like, I want to switch banks. Do I need a lawyer? Yes, you do. When you use the bank's lawyer, they're using a third title company. You're dealing with the ownership of your property. You can't do it yourself. You want a professional that does it, and you want title insurance. So
and there are also like clauses that I would put into an offer, like for a lawyer to, like, let's say there's tenants that live in the property and they have like there's 3 tenants and they all have 3 different leases. Like, we can put a condition in there to have a lawyer review those leases, so that you kind of understand that as well. Or if a property is tenant occupied, then you need certain conditions. If there's something that's very specific about a property, or if it's something unusual, I always recommend for my clients to consult with a real estate lawyer, or I can recommend 3 lawyers for them to consult with, to make sure that they don't find themselves in a kind of a sticky situation at closing, or they know the risks if they're going into something that's like very much out of the box.
Yeah, thanks, Alex. I do want to share one quick thing, because I know today there's a lot of concern when it comes to interest rates. We're in definitely a higher interest rate environment, and there's a chance the Bank of Canada may pull the trigger again in July. When you look at investment property, you got to look at it at a different perspective. The costs involved with this could actually become a benefit for doing it. So higher interest rates could become a benefit when it comes to doing it in the short term and long term, right? You're going to own a property. You're doing this for the intention, I'm hoping, for a long period of time, not just 2 years, 3 years, or 5 years, right? 10, 15, 20 years. And over that period of time, interest rates will change. There's about 7-8 billion people on this planet. There's not one of us that are going to know the exact date all these future events are going to happen. So all we do is we make the best decision on the information we have, and try not to assume something that's going to happen. Interest rates are going to change. We are in a higher interest environment, but it's not going to be here forever. The economy goes through cycles. We've gone through a massive peak. We're contracting. Sooner or later, we will find a bottom. And the interest rates will need to come down, and then afterwards, the economy will start recovering, going back to the growth. The last time I checked, and Alex, that first graph you showed it's a long-term play. For every person who bought at the peak, 10 years later, will look at the property they bought. Everyone will wish they bought too. I worked with customers that bought the peak, in 2017. A year later, they're like, oh my God, the value of my home went down to 100,000. And now that they refinanced it and they bought another property and it's worth way more than what they bought it for.
Yeah.
Right. So you got to put it in perspective, right? The environment and your objectives of why you're buying the investment property.
Yeah.
It's not a quick get rich quick scheme. It's a long-term investment. And once you own one,
It's easier to own more.
it's easier to own more. And it's like in a tattoo. Once you get one, it's addictive.
Yeah. Claudia wants to know, how soon can you refinance an investment property after purchase?
Again, if you're buying with 20% down payment, the refinancing, there's no extra equity, right? The mortgage you have is up to 80% of the value. There's no equity for you to pull out. So there's no real time frame when it comes to like house. It's really how fast is that property appreciating. People usually refinance over time because over time, the tenant's paying the mortgage, making the mortgage balance come down, and the property. Let's just try. Let's keep it in perspective that it'll slowly go up, right? We don't know when we're gonna get the peaks and the valleys, and sometimes it goes up faster than other times. So you could really take equity out once. You refinance any time once there's equity in the property.
I guess when you do your mortgage renewal after 5 years, we don't know, we can't foresee the future, but in many cases there would be substantial or some equity available at that point for you to pull out, depending on how quickly the market appreciated and what happened in the last 5 years. But it's kind of a time to look at it, right? When you're renewing your mortgage.
Yeah, you could refinance anytime. You don't have to wait till the end of the 5 years. Because again, people are, to buy the investment property like the example we gave in the slide when it comes to like how you can take equity out. People are getting lines of credits now. People are getting the second components or adding to the existing mortgage now because the properties have appreciated really quickly in the Greater Toronto area. So a lot of people do it after 5 years. Some people do it in between. There's no clock or date that says once you buy it, okay, in 6 months, 1 year, 3 years. It happens when it happens, and it's when you're ready to take equity out.
Yeah, and it's also a good opportunity. I mean, when you refinance a property, if you want to, like let's say maybe you've accumulated some consumer debt, and you have an opportunity there to use that equity at a lower interest rate to pay off, credit card debt, which could be at 21%. So it's kind of like about looking and taking steps on what makes sense. Now, SA has a question, and I've gotten this question a lot as a real estate agent, and I've actually also asked my real estate lawyer this question as well, and it's about fraudulent properties. So fraudulent people selling property. So the question is, this has made the news lately. Fraudulent people selling properties that they were maybe renting, selling someone else's property. What happens to the new owner purchasing the property? So the answer that I got from my client's lawyer is that you do have title insurance in every real estate transaction. So title insurance would cover both parties. If there's a fraudulent transaction, it will cover the seller, it will cover the buyer. There's title insurance in place. And that happens, that's a standard. Like you pay for that always.
Yeah. And one thing I want to point out, if anybody over time as you own properties, even though you have the mortgage paid off, you never want to leave that any property with no lien on it. Always recommend getting at least a home equity line of credit. So if somebody wants to do something with that property, there's credit attached to it.
That's so discharged.
It helps deter mortgage fraud and property fraud.
Yeah.
So Benjamin asks, can you pay a lump sum to reduce your mortgage? The answer is very easy.
We talked about that 2 weeks ago too. That was a good webinar. It's posted on our YouTube as well, Benjamin.
Yes, primarily every bank gives you flexibility of either putting a lump sum or increasing your payments to pay off your mortgage faster. So that's a really quick question.
Now, SA, I guess, has a follow-up question, which is, would it be the person be reimbursed for the full amount? So, I mean, if it was a fraudulent sale of the property, then, kind of everything goes back and reverses. The person whose property was sold. Honestly, I don't know the full details, but I imagine the person whose property was sold, like that property is no longer sold, and then there's the buyer who's out something. So, basically what the lawyer said is that they would be like title insurance would look after that. I don't know what the procedure or the complexity, the details of that would be, but there is insurance, and this is something that's been actually happening. I mean, it's been in the news lately, but it's been going on since the 80s. So ultimately, at the end of the day, it's a criminal offense. So it's there will be various factors in play here. Police, I'm not going to get into guessing, but I'm sure there are probably some news articles. Like, I don't know if you're familiar with these scenarios.
Let's leave the legal aspects for the lawyers, Alex. Good question. I say, like, again, I'm very familiar with title insurance, but mortgage fraud and purchase fraud, title fraud, like, best person to consult and answer that is going to be your lawyer. As much as we both have information and insight on it, we're not the ones that's going to actually be fighting on your behalf to dealing with title insurance companies, right? So we got more questions. Will that large lump sum make you eligible to get interest only loan? Meaning, I'm assuming that you're meaning a line of credit. Well, if you have a mortgage, the mortgage payment is both principal and interest. So when you put a lump sum, it reduces that balance, where you could then have the choice to either reduce your payments or keep your payments the same and pay off faster, where your amortization is getting reduced.
But if you're making a lump sum towards your mortgage, that will go towards the principal, not towards the interest, right?
Correct. 100%. All that lump sum, 10, 20, up to, depending on which bank you work with, 10%, 15%, 20% of your original mortgage balance, all of that goes towards principal.
Yeah. Benjamin, and sorry, Timothy, I hope we answered your question. If we didn't, please just let us know, and maybe, let us know what part we didn't answer. Happy to talk about that more. Benjamin, I don't know what OWK is, but is paying off advised, or it depends? If not, what could be better approaches?
Benjamin, if you could explain what OWK means, maybe we could help.
Yeah, or maybe I can Google that. But Jason has a question about, how do you feel about a property, for instance, a cottage that is used for short-term rentals? Oh, I meant okay, and is paying off advised, or it depends? Okay, so is it advisable to
so I'll kind of, again,
is it advisable to use a lump sum to pay off your mortgage? Is it advisable?
So as we're talking tonight about investment properties, I'm assuming you also have an owner-occupied property. So this is where you got to put into perspective. Do you want to pay off an investment property where any interest or cost associated to it could help benefit you when it comes to taxes? Or do you want to pay off your principal residence, where any interest you pay on that, you can't really give to your accountant any receipts or any interest on that mortgage? You always want to kind of pay off your principal residence first before an investment property. Investment properties, again, this is my own personal opinion. I don't want to talk to a financial advisor, tax experts, so on and so forth, but it's always good to have a mortgage on an investment property, because those costs help offset the rental income for taxes.
Yeah. I just also posted the link in the chat for the recording of the webinar about paying off your mortgage faster. So I think, Benjamin, a lot of your questions could be answered there, but if not, also feel free to book a call with us. Happy to discuss, any individual situation offline as well. Jason, how do you feel about a property, for instance, a cottage that is used for short-term rentals, such as Airbnb, VRBO, etc.? So, Jason, one thing that I want to point out is that municipalities can ban short-term rentals as well. So I had a client that bought a property that they were renting out on Airbnb, and then the municipality decided to no longer permit Airbnbs. Or like the township, or the city or whatever. This is like up in north of Barrie, like close to the Georgian Lake, so Georgian Bay. So, you're kind of running that risk. If you're looking at a condo for Airbnb, there are some condos that allow short-term rentals in the GTA. For example, we all know about ICE condos, or maybe not, but ICE condos is a well-known one. It's right beside Union Station. There's 2 towers. They allow Airbnbs. Because of that, most of the people who buy units in there, well, not most, but there's a lot of people who buy units in there with the intention of renting them out on Airbnbs, So it's not that great for people who own or occupy their units. And the board of directors has recently also, kind of partnered with Airbnb, because they're like, if we can't beat it, join it. So if we can't, vote out this policy on allowing short-term rentals, what they did is they made it so that Airbnb is the only platform they can use. There's now a premium, 15%, which owners pay from their Airbnb proceeds to the condo corporation, which they use for things like repairs, hiring extra security guards, etc. Building staff also have access to the Airbnb platform now, so they know who the tenants are. They're going to be coming in there for short-term rental stays. So, ultimately it depends. It's a lot more hands-on. If you're going to be owning a cottage or any Airbnb property, you also have to have a team in place for cleaning, handy person. You have to manage it. It's a lot more hands-on, but you can make substantially more money doing that. But essentially, you're running a hotel, and there's a lot more budgeting, and it's not as passive. It's much more active. You're very much, an active investor at that point.
Could I add to that, Alex, just really quickly?
How do lenders look at financing for Airbnbs?
Few things. One, if there's Airbnb on the listing, it's a big no-no. Banks do not do finance. The big banks, if you're looking for that prime financing, don't do mortgages on short-term rentals. And second, if you're looking at buying a cottage for investment property, nothing wrong with that. But you remember, it's seasonal. So there's going to be times when you get good rental income. There's going to be times when you get maybe no rental income. It's going to be maybe more volatile versus owning your traditional condo, townhouse, single family dwelling or a duplex or anything like that, where you constantly have a tenant, right? So every investment property is a little more unique and has advantages and disadvantages. So investment properties as a cottage can be profitable. At the same time, comes with different risks associated with it.
Yep.
So I hope that answers it. Just in addition, because you brought a good example, Alex, with regards to the ice towers that are in Toronto. Short-term rentals are very different than long-term investment properties.
Yeah. Benjamin, to answer your question, so yes, as a real estate agent, we do have, my brokerage has a preferred vendors list, preferred vendors database for mortgage brokers, for real estate agents, for real estate lawyers, contractors. So, we always recommend 3 service providers and allow, the person to kind of make their decision on who they want to work with. David Gordon, but is it safer? No bad tenants, and it's only a few days. Potentially, but there have been situations that you can read about in the news where, people rented out the unit short term. They're coming into the city for a party, and things happen, damage, breakage, floods. So it really depends on what kind of property it is, who you're tailoring to as clients. So from the perspective of, I guess, if you're looking at it like a long-term tenant kind of staying in the property without, you having to go through the residential tenancies board to get them out versus, an Airbnb guest, I do think that there are some laws in place where if they stay in the property for over a month, then they have the same tenant rights as a long-term tenant. I'm not sure if this was recently reversed or not, but there was something along those lines as well. So, it really depends, because they can cause damage to your property, or they can invite guests or unruly people to stay in the property. It might be Carmelo that's the one that's applying to rent out the Airbnb, but then he brings, 15 of his college buddies, and there's a frat party there. So you never really know, David.
I also want to share to Benjamin and everyone here, real estate mortgage agents, those who work with me, and now that you're all part of our group, you have access to not just working with us. Also, you got access to my network, different lawyers, appraisers. Also, I work with a lot of, a bunch of my clients are contractors, electricians, plumbers. I have a really good insurance person. Because again, if you're owning investment properties, you got to think long-term and protection for yourself. I'm not going to be here telling you I'm the mortgage insurance expert. I'd rather refer you to an insurance expert. I've had customers reach out to me. Do you know an electrician? Where do I look at where they live? Yeah, I know an electrician up north, and that works up in Bradford, lives in Bradford. I know one that's in, Mississauga. So it's you get access to our network. So there's more than just lawyers. I work with Alex as a realtor and myself.
Yeah. So are there any other questions? I mean, I think this is great. Like there's some real good back and forth here. Really happy to, thanks, Benjamin. Really happy to stay on here and answer questions. Again, I don't know, I think we posted it some time ago, but if you want to connect with us on Instagram, I'll post that.
We will be back in 2 weeks, which is good news.
Yeah, we'll be back in 2 weeks for part 2. So we hope that to see everybody there when we actually give some practical experience, kind of showcasing what we've done ourselves and what has worked.
Hope to see everyone again in 2 weeks. If you do have some time tonight afterwards, feel free to put a comment in our message group. And again, please feel free to invite people. Those who missed tonight's presentation will still get a lot of insight if they join us 2 weeks from now. Even though we call it part 2, it's just we've been over an hour and we're really excited. But it just goes to show there's a lot of information when it comes to investment properties.
Yeah. I'm gonna stop the recording, I guess, right, Kamal?
Sure, that sounds good.
Amazing. Thank you, Eden. Dan. Jason, amazing.
Thanks, SA.
It's good to see these comments because like I said, like when we're putting the presentation together, we want to, it's like we're kind of making a judgment call on, how informative it's gonna